Alright, welcome back to the Junior Small P channel. Time for a fast-paced run through the headlines. Real fast, lightning speed, take a trip around the globe, talk about things real quick. Hopefully you guys are psyched out and ready to gobble this stuff up, because I do not have a lot of time this morning, so we got to get through this so I can get to work and do my chores. Yeah, my chores, my errands, my busy work, you know. Alright, another boring day on the Junior Small P channel. Charts, numbers, economics, metals, news. US dollar, yep, dipping a little bit, going down, having an opposite and reciprocating effect on other markets and commodities as expected. Dollar's down below 95, causing silver to take an unbelievable healthy pop. Nice little percentage point gain there for all of you silver guys. I know there's a lot of silver stackers that watch this channel and participate. Appreciate you guys being here, so props to you guys for holding some heavyweight silver. I think it's going to be a very healthy year for silver. I think silver's looking awesome. It's going to keep on doing what it's doing, and it's going to react here probably more so than we're even seeing right now. Oil, obviously, like we just said, reciprocating effect of the dollar. Dollar taking some dips. Plus, we have some instability in other regions. We got the whole Saudi conflict going on with Yemen. Middle East is constantly in turmoil, and that always has an effect on oil as well. Gold also popping a little bit there, so we got gold and silver both, you know, taking a little rebound bounce here. That's good, as expected. However, I know you guys are in the same boat I am when it comes to wishing metals would stay low so we could buy more of them. Once they get to a point where they become unaffordable, then we're just staring at the screens, wishing the prices were where they once were. 10-year Treasury yield also rising. Okay, nice little article here. Interesting article anyway. Robert Griffiths, U.S. to have another run before final crash. 2016 or 2017. He's one of those brave souls that's trying, he nails down specific years. I don't like to do that, but let's read what he has to say and just see what some of his points are. We're not going to read the entire thing, but we'll cover some highlights here. U.S. market in bubble territory. I've built an asset allocation model in which we compare 40 different world markets, and when I look at all global assets on average, they're fairly valued. There's nothing much to worry about, but within the matrix, there are one or two markets which are frankly expensive, and it doesn't matter whether you use the Shiller PE or the forward PE, Tobin's Q. However you stack it up, the U.S. market, by its own historic standard, is expensive now. In fact, you could say it's quite well into bubble territory. Now, there's a lot of other guys that are forecasters out there, trend guys, strategists, analysts, predictors of things, that are also kind of painting the same picture he is. And it doesn't take an expert, really. I mean, just look at the numbers. Look at the valuations of the Dow, the S&P, and the NASDAQ, and you can see they're quite elevated. Not time to sell yet. Possible bear market in 2016-17. The U.S. has not broken out of its bull market into a bear yet, but it is having a struggling period, and probably in the second half of the year, let's say from June onwards, it will break out upwards for another run. However, the same model goes on to say that the 6th and 7th years of the decade, 2016 and 2017, have a high probability of being negative, and really quite largely negative. So we're coming up to a sell, but we're not at the sell yet. Significant rally in gold this year. If you've got gold in any other currency other than dollars, it's other than dollars, we'll say that. It's already in a new bull market. Clearly, it's bottomed already, and you don't have to look at just the Russian ruble to prove this. I mean, the euro is working fine as well. I actually think that even in U.S. dollars, you're going to get a trade up in gold pretty soon, in the next few months. I don't think this is a trade that takes it straight out past 1900 to a new high, but I think it will be a significant rally. I'm thinking 14 or 1550, comfortably higher than we are now. So there you have some little predictions from this gentleman. Now, you never want to be the last person to sit down in musical chairs, right? So you got to take what he's saying with a grain of salt. Because obviously once the herd starts to run and move and prices start to shift, snap your fingers, it's done like that. You wake up, you were asleep, markets all over the world were trading while you were sleeping, things happened, and before you know it, you're late to the game or late to sit down and you're left without a chair. So you got to start getting ready to make your decisions early, and you prepare for whatever might be occurring earlier. Now, he's saying 2016 or 17. You know, we saw these types of predictions preceding the 07-08 crash. Some people were more accurate than others. And I believe the severity of what he's talking about could be far worse. I don't think he might not grasp the full gravity of the situation. Because I don't know if the Wizards of Wall Street, these magical magicians that conjure up little formulas in their cauldrons in the casinos, are going to be able to cast the right spells to stave off the economic calamity that could be, washing towards us like a tsunami. The tsunami of debt and derivatives and inflation and just currency collapse. I don't think that these central planners, these central bankers, these treasury secretaries, what have you, these people that are in these elevated positions of power around the globe to control and manipulate the financial markets, I don't know if they have what it takes to work the proper magic. Because that's really, hopefully you don't mind this analogy, that's really what it is. I mean, these guys are like Gandalf, the gray, or the white, or whatever you want to call them. These guys are that run these markets and participate in setting policy and working on the Fed board and manipulating interest rates and bonds and all of these things. Now, they had to really spin some magic to pull us out of that nosedive we were in 08. And a lot of people, myself included, would bet that they're not going to have that ability and those firewalls and stops to be able to prevent the next big dip. I think the next one's going to be the real one. I don't know for sure, and I don't know when, so don't even ask me. I don't know when. Let's just say anywhere between now and 2040. How about that? Does that work for you? Sometime between we don't know. That's why you got to be ready all the time, because it could literally happen tomorrow. These things don't come with warning. You look at history, you look at time periods, you look at all the collapses going back 200 years around the globe in more modern or advanced countries. Go back further than that. Go back to Rome. The financial collapse that they experienced with inflation and the destruction of their currency and what happened to the disruption of trade routes. We've covered that on this channel. Go if you want. Go watch that and read that article. But all I'm saying is you never really know. So you've got to be, you're only as ready as you are right now. Go watch the video we've done on preparedness. We cover that point quite well. All right, moving on. Taking a trip around the world. Let's go to Australia. We don't talk about Australia, the other British Commonwealth, formerly known. And we've talked about Canada before and the housing prices there, impending housing market, bubble, possible coming to a pop collapse. Well, it looks like Australia is also having some home price surging. It says Sydney home prices are surging at 5 times the wages and fueling bubble woes. So, hey, an intelligent man learns from his mistakes. A wise man learns from the mistakes of others. So please, dear Australian viewers, I know there's several of you out there because I can hear your accents in your comments and they're awesome. It's my favorite, one of the best accents. So please type in that accent because I do apply it when I read it, believe it or not. Especially if I know you're one of the guys from Australia. I will apply your accent when I'm reading what you're saying. And it just makes you sound cooler. Sydney home prices surging. Don't get involved with this. Don't start flipping houses. Don't refinance if you guys do that there. Just be cool, play it cool. If you're in real estate there right now, consider an exit strategy or something. But don't leverage yourself to the hilt and get all full of debt. Just go get a Minelab 5000 metal detector and start walking around in your beautiful Australian desert and finding gold nuggets for me. Or invite me to come do that with you, because I would love to. I need to go to Australia. Man, I really do. Getting sidetracked here. Okay, what's behind El Salvador's massive gold reserve sales? Well, last month, you guys, when we saw some of those dips, there's a very good possibility that some of those dips in gold were caused by this. But it's always interesting when a South American country is forced to or manipulated to sell some of their gold reserves. A lot of times, it's my impression that it's coming from Western influence or Western banking entities that are doing things behind closed doors that we all can't see and don't even show up in articles. But for whatever reason, they needed to raise some cash, and the El Salvadorians, well, they had to sell quite a bit of gold. So analysts are not sure what to make of El Salvador's recent move that saw its central bank sell about 80% of its gold reserves in March, according to figures published by the International Monetary Fund. A little credible source there. The small Central American nation's reserve bank sold 5.412 tons of gold for $206 million, depleting its gold reserves from its previous holdings of 6.8 tons. So they must have needed to raise some serious cash for some reason. And the question is, and I wasn't really able to find it, is for every time there's a seller, there's got to be a buyer. Now, who was it that bought their gold? Was it a Keynesian central bank planner from the West who thinks gold is worthless? Because it's always interesting when they show up to buy gold. You know, it's like the guy that goes from an AA meeting or something and then straight to the liquor store. You know, if you're a Keynesian, you should not be buying gold. You guys have a problem, right? You don't like it. You're against it. So don't buy it. Makes you look bad. Okay. Now, here's an interesting headline. Martin Armstrong talking about gold bullion to max out at 5,000 per ounce. A little extreme. I mean, again, I don't like to do these types of predictions, but I like to show you guys what other people are saying and then let you come to your own conclusion. That's what we try to do here. Just like digest all the articles and facts and then figure out what is actually happening. But let's read through some of his statements here. I thought this was an interesting little snippet that he has here, and I do disagree with part of it, but let's just read through. Gold rises when people lose confidence in government. It has nothing to do with inflation. That's the part I disagree with. So when you start to worry about government is not going to survive or who's going to win, that's when gold rises, short term. We still have the risk of it going under $1,000 per ounce. It's going to flip when everything is right. It will probably max out at 5,000 per ounce. You are really talking about a major reset coming. 300 years ago, that was the revolutions against monarchy. Today, it's going to be revolution against pretend democracy. We do not have a democracy. Well, okay, so like I said, I don't agree with a lot of what this guy said, like especially the inflation part. Gold does have a lot to do with inflation. You can look at any inflationary event and see the prices of gold and how they correlated. His idea that there's a reset coming, yeah, I mean, obviously, I think a lot of people feel that and see that that is coming and happening, but they just don't see the reason, and there's disagreement as to the what, when, where, how, and who. So we know that some kind of great economic event is around the corner, sweeping towards us. You know, we can all smell the smoke on the breeze, and we're all the little critters in the forest. We know there's a big fire somewhere. We just don't know where, and we just don't know how fast it's moving in our direction. So what we need to do is send our friend the Eagles up in the air, take a look around, and get us back some information. And those are the guys that I trust. Guys like Peter Schiff, guys like Mr. Ron Paul, you know, sometimes Jim Rogers, a lot of those gentlemen like that, Mark Faber. I just believe they've got a lot more credibility when it comes to calling this type of a thing. Now, I just don't know the prices, when guys start throwing big grotesque numbers out there, it's pretty hard to validate those and to come up with facts like, why 5,000? Like, how did you get there, buddy? Like, and I believe that, but I believe it could be even higher than that. But you don't know when or how. And this great reset they're talking about, I think it's going to be a little bit different than what a lot of us have experienced in the past. There's a lot of rumors. It's starting to really circulate the web, guys, about the whole abolishment of cash and cashless society. I saw more articles on it this morning. And I saw one article was titled, "What a Cashless Society Would Look Like and How We Would Arrive There." There was discussion, and these are things I didn't put up. I don't even have the slides right now, so I'm just going to have to talk off the cuff, as we do here, extemporaneously. That's how all of these are produced. I don't have a script or anything. I just kind of read through things and babble to you guys. But there was an article regarding, okay, what's going to happen the day after, and the days after, the following months even, of a dollar collapse in the United States. How does the U.S. government, how do the people react? And it talked about the government blaming cash, blaming the currency itself, and probably some blame placed on, each party is going to blame the other. But ultimately, they're going to sweep towards and try to move towards and justify, like everything, like never let a good crisis go to waste, right? They will eventually justify and push to the public the idea of the cashless society, about the abolishment of cash exchanges, to where you can't hold it, I can't hold it, everything's in a cloud or on these debit cards, and then every transaction in the world is pretty much recorded. And then the state has absolute control and eyes on every single thing that you purchase or sell or take payment of. So you'll immediately see a black market pop up, and it's just, we will then be, at that point, the most economically restricted people the planet has ever seen. So pay attention, wait for those days, and who knows, we'll have to figure it out when we get there, I guess. Cross that bridge when we come to it, as the saying goes. All right, thanks for being here. Thanks for tuning in for the fast-paced Junior Small P channel. Dollars dropping, gold's rising, silver's rising, and we'll see where we end up. See you guys on the other side. Thanks for being here. As always, like, comment, share, subscribe, and participate with the comments.